this video, we are going to be doing some in-depth stock analysis on Disney, ticker DIS, because they did have some killer earnings yesterday and they are now up around 8% on the day. So to get straight into it, what are going to be our key resistance levels going higher? So right now we're actually coming into a resistance, or currently at a resistance level, and that is $122, as that is our first deviation on the daily. And that's why when we're looking at Disney in an intraday chart, we are starting to kind of chop around at this area because direction is kind of unclear. Sellers keep stepping in, buyers keep stepping in. So until direction's a bit clear, we're going to kind of chop in this area. And once we kind of get out of this area, what are going to be our higher up resistances? So our next resistance level is around $136. That is our second deviation on the 4 hour, with the next one being at $150. Again, second deviation, but on the daily. 158, third deviation on the 4 hour. And then 179, which is our third deviation on the daily, but also a fourth deviation on the 4 hour. So this will be a strong level if we end up pushing up to this level. However, obviously that probably won't happen in the near future, just because obviously a stock like Disney isn't going to move that much in that short of a time. And our next resistance is kind of around this 207. But as we don't expect it to obviously push that much, we would really have a key focus on this 122 level that we're currently at, the 136 as that is our next resistance, and you could even be paying a bit of attention to the 150 and 158, but even those seem at least a month or so away if the stock did continue in a uptrend. Now, what are going to be some support levels if the stock ends up starting to fall? Well, at 114, we're going to have our first support levels. That is the first deviation on the 4 hour. However, this is a first deviation, so we would expect some sort of a bounce on this level. However, if it does come down to this level, we would actually expect it to push further to at least this $112.50, because that is the gap fill that was created yesterday on their earnings, and most gaps in the market do get filled. So really, when the stock does start pulling back, we would expect it to kind of just keep pushing to that gap fill location. Now, if we continue down, what are going to be even lower down targets? So really the kind of $93 range, $95 range, it's going to be another key support, because that is the statistical mean on both the 4 hour and the daily. So coming into here, again, we would expect people to be closing out positions and maybe some people buying, but really this would be our kind of key target if we're shorting and we're looking for a very far off target. But also it is an area we could potentially start looking to buy, because we would be near that 52-week low. Getting Disney around $90 is relatively cheap, and that is also our statistical mean. However, you want buy targets that are a bit lower and lower than that 52-week low, and a high probability to work. Then we're going to be looking at the $65 and the $72, as these are our first deviations on the 4 hour and the daily. But obviously getting down to $72 and $65 is quite unlikely, at least in the near future, considering they've just had good earnings, and even during its 52-week low, it didn't even really get that close to those levels. So that could be a bit of a push, and that's why we did mention this statistical mean at 93, because that could happen a bit sooner. And then quickly, we will just note even lower, further down support levels, even though these levels are most likely not going to happen anytime soon, if at all. And that would be the $50, $36, $28, and the $8.85. Hope you enjoyed the video. If you did and you want to see another large cap analysis video, go here. And if you want to see a video on my trading strategy that I trade every day in the stock market, go here.